Hello, I'm Charlie and welcome to a simple invest video. So in this video, we'll be talking about some common patterns and lines for technical analysis. As you can see here, I'll be using the MetaTrader 4 chart and using a forex chart for Aussie dollar, Japanese yen. First, a few things we'll be talking about. First one will be support lines. So what are support lines? Let's disable this. And yeah, here you can see an obvious support line. Let's draw a line here. Basically, support line means where the price has found like a flooring or a bottom, it tends to reverse upwards. So you can see that these almost 4 points here have always been reversing from this particular price point. Hence, you can draw a horizontal line across it and call it a support line. It helps us to see when the price is either rebounding off the support, or if it breaks through, it could signal a continuation of a certain downtrend, such as from here. So it breaks through here and this trend continues. Next up, we have resistance lines. Hence, resistance lines are like the reverse of a support line. For example, this one is a common resistance line. So support is like a floor whereby resistance is like a ceiling. Hence, resistance lines usually mean, like you can see here, certain points where the price tries to go up, but it keeps reversing. So it has 1, 2, and about 3 points here where it keeps reversing from going up further. And in this case, we can see that it reversed 3 times from this resistance line. And you can have the support line here, because the price reversed from here once. So the price broke through from this support and went through. And you can see here again, the price reverses from here. So we can take this as a resistance. But the price broke up at this point, which means it broke through the resistance. So it went up a little bit before it came back down again. Other than resistance lines and support lines, we can have trend lines. Hence, let's draw a curved line. And let's look at it on the price chart. Okay, this looks like a pretty noticeable trend. Well, but it didn't really continue. But maybe this trend is a little bit more obvious here. Okay, let's stretch out a bit. Adjust it upwards. So this is a little bit of a more obvious trend line where the price tends to hit. So trend line can be on the upper end, or in this case, let's shift it down on the lower end. So it can be either. It really depends on what you want the trend line to do. In this case, I put the trend line on the upper end of this particular downward trend, because I see that the price has reversed from here, from this point, it reversed from this point, and reversed from this point. It also tries to reverse from this point before it finally broke through. So sometimes it could signal a breakthrough in upwards trend, but in this case, the price actually rapidly went down. It tested this trend line again before it continued further downwards, and it broke through the downward trend, so it goes even further down. So if we put this trend line, for example, on the lower end, you can put it across certain common points around here, or maybe I can put it here. Yep. Seems like, yeah, you can put it either this way, or you can put it this way. So trend lines and support resistance lines are pretty subjective. It depends on what you, as the investor or the trader, is trying to see from the chart. In this case, I prefer the trend line to be here. Let's set again. And you can see that the price rebounded from this trend line a few times. So I use this as a guide. And when it finally broke through, this signals a breakthrough in this trend line. So it broke through and it dived very low before rebounding back. And obviously you can have trend lines here again. Like you can see that this trend actually continued. If you link it up all the way, and when it broke through this lower trend line, it actually signaled a further move downwards. in this case here. It actually tested the trend line again further before it goes down again. So that's for trend lines. When you have trend lines, you can also use the trend lines to do what we call a trend channel. In this case, it has this equidistant channel. And let's shift this way. Maybe I can shift this something like this. Okay, let's try to fit it to the graph. Alright, this should be good enough. So something like this is a trend channel where you can see that the price is moving within a certain predetermined range, although it's going downwards, is moving like within a certain range. So you can use what we call equidistant trend lines. That means two trend lines that are running parallel of each other. And you can see that the price is rebounding, is ranging between these two areas. Sometimes it bursts a bit, it goes a bit out and in. So it's really a subjective thing because price is more random in real life. It's not just a theory chart, it's a real life Aussie dollar Japanese yen chart. So in this case, when it finally broke through here, there's a sharp downwards move, and when it broke through here, it moved further downwards. So obviously you can use the equidistant channel in other ways. For example, you can have like a trend channel here. Okay, maybe let's redraw this. Yep, we can see that there's a trend channel going downwards here. There are some attempts to break through to the bottom of the channel here, but when you finally broke through the top of the channel, it actually signals a reversal that goes upwards. That means it stopped the downtrend, but it actually went uptrend instead. So those are trend channels. So right when we're talking about trend channels, we can talk about reversals. I actually spoke about, I used the word reversals quite a few times here. So reversal simply means that if the price is going downtrend, it suddenly goes in a reverse direction. For example, here, there's a reversal and it goes uptrend here. So that's what we mean by a reversal. Talking about reversals, we can also talk about double tops and double bottoms. This area here is a double top. Double top is where the price actually goes up to the resistance area twice. So it goes up here, touches it, goes down, and goes up again in this area. And it touches it actually a few times, goes down. Generally speaking, you can see that there are 2 points here. So there's a double top. Hence it touches the double top and it goes down. There's a reversal pattern. Or you can look for a double bottom. So going further back into 2017, this is almost a triple bottom. So this is more than just a double bottom. It almost signals a triple bottom. Let's shift it a bit. Where the price actually touches the low or the support line here once, touches it again second time. So twice will be a double bottom, but it actually touches a third time, which is a triple bottom before it goes up. Next up on the reversals pattern, let's look for a head and shoulders pattern. Head and shoulders could be somewhere this tree. Hence, maybe I can put a resistance line here. And you can see that it actually almost looks like a triple bottom, except that, a triple top, pardon me, whereby the top of this price is actually goes higher than the other 2 points. You can draw a resistance line here. The price goes up here. There's a double top. It protrudes this resistance and it makes another top here. And tests again on the same top here. Hence, these 3 peaks is what we call a triple top. If these 3 are reversed to the bottom, we call it a triple bottom, but we call this a head and shoulders pattern, where the higher one is the head and the other two peaks are the shoulders. Head and shoulders patterns, double tops, triple tops, or the head and shoulders pattern, bottom, double bottom, triple bottom. These are all standard reversal patterns. Obviously, you have to take these patterns with a grain of salt. They don't always come true, but when you see them, especially on the daily charts, on the longer time frame charts, you do see them quite a bit. Other than the reversal patterns, let's talk about a very common wedge formation. Wedge formations, I do not have a triangle 2 here, but you can see that this zone here, maybe I can, okay, is there a 2 I can draw? Do not have a 2 here, but you can see that this zone here, it almost forms a triangle. That means the price goes up, goes down, goes up again. It goes down but doesn't touch the same low price point before it finally breaks through. So there is this triangle formation here. This is one line. This is the other line. And this is the third line. So it almost forms a triangle wedge shape. We call this price wedges. Price wedges are consolidation patterns where the price tends to stay in that particular region for a period of time, which means it can't decide whether it will go up or it will go down. Hence, usually a lot of traders and investors, when they see wedge formations, they will actually wait. That means they will not decide to whether to buy or sell. They will actually wait for certain confirmation, for example, a breakout. In this case, the price actually broke out lower out of the wedge formation, which signals a downtrend to start, and it went through. So let's see, we can even see wedge formations forming, for example, smaller ones here. This almost looks like a triangle. One here, and one here. Or you can take this as a wedge as well. This is one line, and this is the other line, and this is the other line. So this is like a slanted wedge formation before the price broke up. And we can see wedge formations forming, for example, here. This is a triangle in a way. So there's one line. This is the other line. And this is the other line. So this is like a slanted triangle, a slanted wedge formation. Hence, wedge formations are actually pretty common in real life price charts. So it's one of the more important formations that traders and investors should recognize. Okay, that's about it for now. Thanks for watching and hope you learned something from this. So this is Simple Invest. From Simple Invest, this is Charlie signing off. Have a good day.